What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, NVDA, Tesla, and Amazon. We're going to give you all the levels you need to watch for the week ahead. That way you know exactly where the breakouts and breakdowns are going to be. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that last week SPY once again failed to move back above its 50-day moving average. So if you've seen our videos from the last 2 weeks, you know that we talked about this 50-day moving average being a key support, because this was the level that it took to break above back in March before we went on a multi-month rally. So now that institutional buyers and retail buyers recognize that we're below that level, they know that sellers are controlling the short-term trend. So considering that fact, we have laid out some levels to the downside that can potentially take us lower. First of all, SPY last week came down to a low of 435 before bouncing back. This is a good sign because when we look at the last 20 days of trading, we see that most of August, week over week, we have been making lower lows. Now, last week was the first week in August which we did not make a lower low. We did not come down to the 433 mark, which happened 2 weeks ago, and we managed to hold above it, which means that 435, the level that we bounced out last week, is going to be the most important level going into this week. If we move below that point, then we are expected to retest 431.20, and below that level, it can get real bearish real quick, and we can fall towards 425 to 426. Now, if you are bullish on the market, you need it to break above these levels, but before we get into those breakouts, let's talk about some key events that are happening this week that can potentially send us higher or lower. Now, this week we're getting the PCE report, which is going to give us an update on inflation. Last week, the Federal Reserve's president spoke at the economic symposium, and he advocated for further restrictive policy if necessary and maintained his viewpoint that inflation is still too high. This week's PCE report is expected on August 31st, which is Thursday, and this will give us the latest update on inflation. Month over month, inflation has been coming down. We can see this trend here. We are expecting this trend to continue going down going into this week. The Federal Reserve's target inflation rate is 2%, so the closer we are to that point, the better. Another key report that we're watching this week is going to be the unemployment report, which is expected to come in at 3.5%. Employment rates in the United States have been resilient despite the higher interest rates, so this is still a good sign. We want to be right around 3.5% this week for us to not have any kind of shakeouts in the market. So now let's talk about the bullish levels for SPY. If you are bullish on the market or SPY this week, you need a move above 446.80. Now this level is important not only on the hourly chart, but it is important on the daily chart because that is exactly where the 50-day moving average is trading. If SPY can move above the 50-day moving average and above this level, that means buyers are back in control, and we are likely going to see a further upside move towards a price target of around 452. Above that level, if we can break out, we can see 458 to 459, but that's unlikely to happen this week, so make sure you check back in next week so we can give you some updated levels. So now let's jump into our watch list, and we're going to get started with Apple, where we can see that Apple right now is filled with uncertainty. For the last 4 to 5 days, buyers and sellers have not known whether to take it up or down. So if you're swinging Apple right now, you're definitely not enjoying this price action. So Apple right now is filled with uncertainty because of the fact that it's trading right around that 100-day moving average, which is the level it broke above in January before taking on this full multi-month rally. So if Apple is trading below it, that is a very bad sign for buyers, but buyers are fighting to get their way again, and here are some key levels to watch on the short term that can potentially regain that buying momentum. First of all, if you're buying Apple, you need it above the 182.80 mark in order for it to reach for that 186 mark once again and potentially fill that gap down from their earnings. It is unlike Apple to gap down from earnings, so this is definitely shocking many investors, which also contributes to the uncertainty the stock is seeing. Now, if buyers aren't able to step it up this week and sellers take control once again, the first support to watch is going to be 475.75. Below that level, Apple can definitely revisit 170, and below 170, the downside price target is around 167. The next stock on our watches is going to be AMD. Now, if you've seen our videos in the last few weeks, you know that AMD's levels haven't really changed, except for last week, it actually broke slightly below the $100 mark, which was our support going into the last few weeks. So it broke below it and managed to bounce right around 99.60, which makes that the first support and focus coming into this week. If AMD moves below that point, then it is expected to sharply move lower towards 93. Buyers are going to need to regain the 106.80 mark to put themselves in potential reversal territory, but ultimately they need a breakout above 120.80 in order to regain the full bullish trend. Now, it is unlikely that AMD moves all the way back above 120.80 this week unless there is some kind of strong catalyst that sends it higher. The next stock on our watches is going to be NVDA, which reported stellar earnings last week, and despite the fact that it reported stellar earnings, the stock still sold off the entire day of its earnings and the day following. Now, even though it sold off those 2 days, the NVIDIA is still trading above its 10, 20, and 50-day moving averages, making it one of the only tech stocks that's doing so right now. Now, one thing to point out about NVIDIA's daily chart is the fact that their relative strength index has been making lower lows as the stock has made higher highs, which is called a negative divergence, and it can signal weakness in the stock. Now, most people use the RSI to see if the stock is oversold or overbought, and yes, a stock trading above 70 is going to be considered a little overbought, but RSI is still measuring relative strength. So on breakouts, you want the RSI to be near or above 70, or at least above its previous high, in order to prove that there's enough relative strength in this move to take it higher. NVIDIA has not given us that yet, which indicates that the stock may be turning a little weak. Zooming in further, here are some key levels to watch on NVIDIA. First of all, you want to see the stock maintain the 450 level going into the next few weeks. If buyers can defend that level, then they can easily retake it to retest the 478.80 resistance, and above that point it has two price targets at 490 and 507. If buyers fail to defend the 450 mark and NVIDIA moves below 435, then that downside price target is going to be around 416 to 417. NVIDIA's moves have been very aggressive. Some days it's booking $30, some days it's losing $15 to $20. So don't be surprised if NVIDIA catches a trend and continues in that trend for the entire day. The next stock on our watches is going to be Tesla, which, like other stocks, has been a very volatile stock, and it's trading right around its 10, 20, and 100-day moving averages. Now, Tesla last week managed to regain the 10-day moving average. It created what looks like a bullish flag above that level. This is a level that has not been moved above since it broke below it back in the middle of July. So Tesla above that level can lead into a bullish reversal, but we can't trust it just yet because this could be a fake out. Here are some levels that we're watching for the week ahead for Tesla. First of all, we need Tesla to move above the 242.20 mark in order for it to move to a price target of around 250 to 252, and the second price target above that point is going to be 258.50. Now, 252 is a very key point for Tesla because this is where it saw a triple top rejection. Triple top rejections do usually lead into a very strong downside break, and they're very hard to get above. And so if Tesla can move above 252, that's when we would be most comfortable telling you that this stock is back in a bullish trend. Now, to the downside, Tesla is going to need to defend the 226.50 mark in order to avoid selling off to this price target here. And below that level, the downside price target is going to be right around 206 to 207. Last but not least, the final stock on our watches is going to be Amazon. Now, Amazon has given up most of its post-earnings move, and it has filled that gap back down, or nearly filled the entire gap. Last week, it managed to stay above the 50-day moving average, so that is a good sign. If Amazon can continue to do so this week, it has a chance of reversing back up. Here's some short-term targets and levels to watch for Amazon. First of all, you need to move above 138 in order for it to regain the short-term bullish trend. Above that level, it can see a price target of around 141.30. However, the ultimate breakout is going to be 143.63. Above that level, it can see 145 to 147. To the downside, the first support and focus is going to be right around 130.50, but the ultimate support is going to be 126.40. If Amazon moves below that level, then its downside price target is going to be right around 123 to 124, and second downside price target is going to be 119 to 120. So before we wrap this up, we just want to remind you, do not get too attached to one side on the market. Obviously, you guys can see that by our levels and by the way we chart things, we have no bias when it comes to the market. Our long-term approach is buying comfortable indexes and safe stocks, and we do so on our hyper wealth side. And we don't really check on those stocks too much. We're just buying them because we know they're fundamentally strong. But our short-term approach when it comes to technical analysis, we are trading the ups and the downs every day, taking advantage of calls and puts. You can see here, for example, we traded a put on Visa, and just a couple weeks ago, we traded a call on Visa, and we took profits on both. So we're not too attached to either side. All we're doing is taking advantage of the ups and downs of the everydays and trading both sides, sometimes both sides on the same day. So don't get too attached to one side, especially when markets are consolidating and potentially on the verge of a reversal. So thank you guys so much for checking in. I hope you guys found this video helpful, and best of luck for the week ahead.